Hello, and welcome to our second video on candlestick anatomy. In this lesson, we'll be exploring the different parts of a candlestick and what they mean for traders and investors. Candlesticks are made up of three primary parts. 1. The body. 2. The upper wick, or shadow. And 3. The lower wick, or tail. The body represents the opening and closing prices of an asset over a given time period. The body is rectangular in shape, green or red in color. The color can be customized to your preferences on most of the platforms. The upper and lower wicks indicate the highest and lowest prices reached during that time frame are the lines that come out of the rectangle. The color of the body can tell us whether the asset's price went up or down over the given time period. When the closing price is higher than the opening price, the body is typically green or white, indicating a bullish trend. When the closing price is lower than the opening price, the body is typically red or black, indicating a bearish trend. The length of the upper wick can provide valuable information about the strength of the bullish trend. If the upper wick is long, it may indicate that the asset's price was pushed up to a high level, but traders were not willing to continue buying at that price, suggesting a potential resistance level. Similarly, the length of the lower wick can provide valuable information about the strength of the bears. If the lower wick is long, it may indicate that the asset's price was pushed down to a low level, but traders were not willing to continue selling at that price, suggesting a potential support level. Together, the body and wicks provide a visual representation of the asset's price movement over the given time period. This information can be used to identify potential trading opportunities or to make more informed investment decisions. For example, a normal bullish candlestick occurs when the closing price is higher than the opening price, resulting in a green or white body. The longer the body, the stronger the bullish sentiment, indicating a potential uptrend in the asset's price. Another example is the hammer candlestick, which is a type of bullish candlestick with a small body and a long lower wick. This candlestick often indicates that the bears pushed the price down at the open, but the bulls took over and pushed the price up, suggesting a potential reversal or continuation of the bullish trend. Understanding the anatomy of candlesticks is an essential skill for traders and investors. By interpreting the information provided by the body and wicks of a candlestick, and by recognizing different candlesticks, traders can identify potential trading opportunities and make more informed investment decisions. In addition to understanding the basic anatomy of a candlestick, it's also important to be familiar with different types of candlestick patterns. These patterns are formed by the combination of multiple candlesticks and can provide valuable insights into the market sentiment and potential price movements. In the next lesson, where we will talk about patterns. Thank you for watching, and we'll see you in the next video.